decision. Was it something that the market had expected?
Of course, and good afternoon to you. And I think the decision by the Monetary Policy Committee of the Central Bank has not come as a surprise, for the simple reason that the country in the last 3 months has experienced an upward surge of pressures in terms of inflation. And the decision, I think, is timely. It's a direct response to what is obtaining on the market. And I think it poses a huge challenge in terms of them being able to achieve the target, which has been benchmarked for this year at 7%. So it's going to really be a very, very tall order.
So really tall order. So in what you're saying right now is that we could perhaps see a further interest rate increases coming through for the country.
Yeah, because the period that we're now entering is a very difficult quarter-ending period, which I think you will agree with me that there is coupled with the exchange rate pressures in terms of demand on the foreign currency, which is the US dollar, against the background of supply being rather limited or demand exceeding far in excess of the supply. As a consequence of that, you have the exchange rate also depreciating. But I think of fundamental recognition is the fact that we have seen rather the demand exceeding the supply, for the simple reason that at this time of the year, we have got mainly imports. Being a country which is import dependent, and the festive season being around the corner, there's so much demand on the currency to be able to facilitate the imports to be able to meet the Christmas festive season demands.
Now, looking at the kwacha, we had it on Monday. It was slowed to its lowest level in more than 4 months. So a lot of pressure coming through for the kwacha there. What do you make of the current moves that we are seeing on the currency right now?
It is worrying and a matter of concern in terms of the market players and also the business community in the country, for the simple reason that I think the depreciation that we have experienced in the last 1 year can be probably just a little bit of a background. In the first quarter of the year, we had the kwacha experiencing or recording some volatility, which again unsettled the market. This was as a consequence of the policy pronouncements of the government in terms of introducing what we call the statutory instrument number 33, which banned dollar transactions in the economy. That sent a lot of discomfort to the investor community, and we see this carrying through to what the situation is today, for the simple reason that the key players in the market who believe that they can be able to bring in the dollar and trade as and they wish are more or less taking a wait-and-see position. So the impact, I think, what we are seeing now is as a consequence of the statutory instrument 33, which has banned the use of the United States dollars or any other foreign currency in the market. So compounded by that, we have the situation which we are seeing the dollar depreciating in the last 1 year in excess of 50%.
So what does this all mean for economic growth, Noel? What is your outlook for economic growth before the end of the year?
Well, the government has targeted to achieve GDP growth in excess of 6%. But I think, to me, that again will seem to be a tall order. And in terms of the budget, what you call pronouncements by the Minister of Finance, they are looking at a situation of creating about in excess of 1 million jobs in the next fiscal year. But again, we cannot achieve or get anywhere nearer to that with the GDP growth that we're currently achieving. And I think the way forward will be the government to be able to create the necessary incentives and input into the economy to be able to achieve GDP growth in excess of 10%, to be able to achieve what they have set for themselves.
Well, thank you.
It is very difficult time for the economy, but we are hoping that the copper prices, I think, which have taken a dip in the last few weeks trading, to be able to probably rebound and maybe to review some of the policy that have been put in place in terms of making them investor friendly as well as attractive to the foreign investors, and particularly probably a revisit of the statutory instrument 33 that I talked about earlier.
Well, that's where we have to leave it. Thank you so much.
So I see going forward a situation whereby the central bank, the MPC, may be forced again to adjust the interest rate further up. Because as you may rightly be aware, we are having a situation where demand, the cost of production in the country has increased as a consequence of the minimum wage, which was introduced by the government, which has made the manufacturing sector, the minimum wage, the increase in the minimum wage. So labor being an input in production has, I think, also impacted negatively on the current scenario.
That's where we have to leave it. We have run out of time. Thank you so much for joining.